Hi, guys. I am so excited to have another wonderful female entrepreneur who honestly, I wait till you meet Shayla because she is just an amazing person. Anytime I talk to her and we said we're going to talk for a few minutes, we're on a call for like the longest time. Our kids are sleeping and we're still talking money and credit. So I want to introduce Shayla. Her and her husband have an amazing business that I can't wait for her to tell you about, and it's called Cheating Debt. Hi, Shayla. How are you?
Hello.
Hi.
So I am Shayla, and my husband and I own a credit repair company located in Fort Worth, Texas, called Cheating Debt. And we help our clients fix past credit mistakes. We operate a little differently than a lot of other companies do. We are a lot on the educational side. So
Love it.
we like our clients to understand why we're disputing this, or why we need to pay this, or why we need to pay our credit cards down, etc. We explain everything to them so that once we're finished repairing their credit, they're able to just like maintain that good credit. So we're a little different than the other ones.
I love that, especially like with my YouTube audience, because that's what YouTube is about. It's about being educated. Like that's one of the things I love about it because, on Instagram we get to know each other a little bit like in a deeper level as far as like when we do collaborations. But what I love about YouTube is that it is educational. So we want to explain why we say things. Like if I were to go on, with a client personally or on my YouTube channel and say like this is what I would do if I were you, period, end of discussion. What did they learn? And then if you don't learn, you're going to make the same mistakes again. And what's the point of hiring someone as educated as you are to help them clear up their credit if they're not going to learn? Because if you don't learn, you're going to make the same mistake and it could be worse. And then they're back and they're going to feel like, okay, well, I'm back here once again with you. So the educational piece is something that I think sets you and your husband and your company apart from so many others out there.
Yes, and we work one-on-one with our clients.
Love it.
So we own and operate.
I love that. And it's a personal touch, like I
Yeah.
don't even want to say like I know there's like, I love supporting small business, but you don't have a small business. I saw your website. I am sorry, but and I mean you can go pages on pages of people that leave comments to like how amazing and recommendations for you. I mean, just the fact that you and your husband started this, it's unbelievable that a couple started a business the way that you have it, honestly. And I'm so excited to be able to, now that I know you, like refer my clients to you and people that are watching on my YouTube audience as well. Because when I talk about personal finance, which is what I do here, and I love sharing tips on how to help them, become empowered to take control of their money, to start budgeting for the first time, to get out of debt, to start saving and to start living the life that they want to live, not the life that they feel they have to live because they feel like they're paycheck to paycheck. When I talk to my audience or when I'm working with my clients, credit scores is something that constantly comes up. And there are so many myths that go around the credit score that I'm like, I couldn't wait to have you on. It's like as soon as I started this, I literally thought of you. I was like, you have to be a guest like from the drop because I can't tell you how many times I've heard these things. And like I don't even want to go into it because I want you to talk about it. And I know there's going to be one of these 3 tips that you're going to give to improve how you can improve your credit score. I know one of them is going to touch on a sore topic that I talk about all the time in the comments on my YouTube channel. So why don't we kick it off? You're going to talk about 3 tips. What is the first tip you want to share with us?
So my first tip would be build your credit profile. Don't be afraid of credit cards. Don't be afraid of a line of credit, anything that's going to positively affect your credit
Mhm.
score, if used properly. That's the key. So these things can get us into debt. They can get us into a lot of problems. But
Mhm.
if we understand how to use them to our advantage, they could be a very, very good tool. Credit cards, if used properly, they help your credit mix, which is calculated whenever they're looking at your credit score. So they want to see different types of accounts to make sure that you're paying on time. And the credit limit doesn't matter. I think that's a big misconception is people think they have to get approved for a $5,000 credit card. No, it could be a $200 credit card. What they're seeing is this person paying on time? Are they maxing out those cards? How are they utilizing this tool?
Mm-hmm.
And if you're managing and you're utilizing it correctly, then it's going to help your credit.
And now with credit line increases, which is something like, first of all, like you and I did a workshop together on the One Heart community, which is a community that that Vanessa Reyes, who I just had on last week, is she founded, and she gave us the opportunity to talk about it. And when we started talking about credit cards, I was just like, you and I are so in tune with how we feel about credit cards. Like, we're not against credit cards. People, sometimes when I start talking about how credit card companies are really taking advantage of people because they're not letting them know certain things that they're doing, which inspired my masterclass that I'm doing next month. And I'm so excited about it because I want people to be informed of what they're doing. Not that they're bad, but it's a business. They're not your friend, you know? Yeah. And I love how although like my part of it is I want them to be educated as to like how to avoid the debt. You are like, yeah, but they're a tool, which they are a tool. Yeah. They are a tool. We're not against the credit card companies at all. But one thing that I wanted to ask you is, what percentage do you think is the right percentage for utilization of your credit limit? Like if someone, for example, has like $1,000 credit limit, what would be the percentage that you would say in order to maintain a good credit score that you would not go past that amount?
So you would not go past 30% utilization. And I like to tell my clients, I'm not going to tell you don't use your credit card. Sometimes you have to charge more than you want to. But that was actually going to be my second point when it comes to credit cards and your credit score is paying it down to 30% by the statement date. Your statement date is different than your due date. Your statement date is the day that they report to the credit bureaus. So as long as you pay it down by that time, you could charge it up, go on vacation, do whatever you want to do, get your points. But as long as you pay it down by the statement date, down to that 30% utilization or less is always better.
Yes.
But as long as you pay it down by that date, then it's going to positively reflect on your credit report. So I always like to tell my clients that just at least by the statement date. Of course, you got to pay it by your due date, and those are going to be different dates. Sometimes you do have to contact them to figure out what the statement date is.
Absolutely. And so when people have a credit limit increase, it can help your credit score as long as you don't start now like using it more and more. You know, you keep that limit increase, but you don't have your spending go up higher. So that way,
and that's another little trick you could do as well is that if you're needing to raise your credit score quickly, you can call the credit card company and ask for a credit score limit increase. And that way you don't have are not carrying such a high balance.
Great. That's wonderful. So I had you jump the gun with your second tip.
Okay.
I can't wait to crush a credit card myth after you share your third tip, because I'm like, I literally had someone ask me this question today, and I was like, nope, I'm not answering it. Shayla's gonna answer it because she's the expert. What's your next tip?
So my third tip is, once you pull your credit report, I suggest everyone should monitor your credit. Credit is not something that stays the same. It's going to fluctuate. So you could have good credit, but it's going to fluctuate points up and down, depending on how much you're using your credit cards. Did you apply for something? Maybe you have inquiries on there. Different things are going to be calculated to your credit score. So it's always good to monitor it, because especially for like errors and things like that. If you're constantly paying attention to your credit score and you're constantly monitoring it, you're going to see if something pops up on there that maybe isn't accurate. And then it's going to also let you know, hey, look, you need to pay down your credit cards, because majority of those apps will notify you like your credit cards are maxed out, like pay them down. And then I will say, when you're monitoring your credit, monitor your FICO scores. A lot of people like to use Credit Karma because it's free. Credit Karma is an awesome tool just to see what's negative on your credit report, but their scores are not accurate. They do not go by a scoring model that anyone uses, which is why you constantly see people say, oh, I was on Credit Karma and it said that I had a 700 credit score, and I went to go buy a car and they said I had a 600 credit score. Well, that's because they're using a different credit model. So I always say monitor your credit. My FICO is really good. Experian is really good to monitor your credit. They are pricier than at other companies that don't offer FICO scores. But that's only because FICO scores are the most accurate. So if you're wanting to purchase a home or purchase a car, if you want to know exactly where you stand, monitor your FICO score. Along with that, I will say, when you're looking at your credit, pay off all charge-off accounts.
Okay. All right. Okay. Okay. So please explain, what is a charged off account?
A charge-off account basically is saying that you have not paid on that account for a certain period of time, and now it is in collections, but it's not a collection account that was bought off by another company. That means the original company owns the debt. So with that being said, we always tell our clients, if it's just you look at your credit report and it's going to have notes next to all of it. If you see that it says charge off, that means if you owe Target still has your debt. So there's no point in disputing and trying to go through that process of prove to me that this is my debt, because they have all the paperwork.
Like, they've got the receipts. They've got the receipts, and they will show you. They will show you.
Yeah, we always joke around and with our clients and say, like, if they mail you back information and the envelope's thin, that means they don't have anything on you. But when they mail you those like big ones, it's like, oh, they've got contracts, they've got signature, they have everything.
That's so funny. That's so funny.
Pay off charge off accounts, because it's the original creditor. And they're going to have all the documents that they have. When you're paying those off, negotiate. I would always negotiate.
Really?
Yes.
Okay.
Yes. Because even though it's the original creditor, they know you owe it, but they can always work with you. Sometimes they'll do payment plans. Sometimes if you pay a lump sum, they will give you a discount. We negotiate debt for clients quite a bit. And a lot of times they get hundreds of dollars taken off of their bill by us just doing the negotiations for them.
That's why it's so important to have a business like yours by their side, because when I wouldn't have known, like, honestly, like if I haven't already talked to you and like picked your brain so much, and like us worked together on Instagram before, like if I was someone who had like I didn't know what my credit score was, I don't know what's on my credit report, having someone like you by my side, like helping me would mean everything, because this is the comment that I wanted to share with you. I get it all the time, and I say it's almost like I have to hit a copy and paste on my answer, because I answer the same way every time, and I can't wait to hear your answer. So my viewers say to me constantly, and I'm nothing bad on them, it's just a common thought, and I was like, you have to bust this for them. So they say, Debbie, like, I just paid off my credit card and I canceled my card. No! Thank you.
So once you cancel your credit card or close it out, all that positive history gets erased. So you're starting all over again. Yes. Again, credit cards are a tool. If used properly, they will help you. You want a credit card that you've had for years and years and years. You want that reporting on your credit report, because it shows, look, I've had this credit card this amount of time, and look, I've never been late, or I've only been late a couple times. I constantly pay it. It's not maxed out. That looks good. That looks good to lenders. So I always say never, 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 never close it out. But a tip I will give is, I get a lot of clients that get their information from TikTok and whatever else they find on the internet. And
Okay.
it says, oh, get a friend to add you onto their credit card.
Mm.
And that will help you instead of getting your own credit card. That does help you if your
Mhm.
friend's responsible, right? So
Mhm.
if your friend is charging up their accounts,
Mhm.
that's going to be negative on your credit.
Yeah.
Um, and then also too, if your friend decides that they no longer want you on the account, all that positive history gets erased. It
Mhm.
once they remove you from the card.
Mhm.
So it's always best to build your own credit. Don't try to go off of somebody else's credit, like a wife going on their husband's credit card, or just get your own. Get your
And
own, build your credit, and keep it.
yeah. And if you have a bill, like a small bill that is a recurring bill, like your Netflix or, something so low that you know it's part of your budget, you know it's something that you pay every month, add that to that card instead of canceling it. So then that way you have a small recurring charge that you pay off every month and you continue to have that good credit standing. Because
Yep.
it's a common thing. I can't tell you how many times people say to me, like, Debbie, like, and I canceled the card. And I was like, and then so here's my part B, okay? Because this is the other comment I say all the time. Some people believe, a lot of people believe that when they already are living in their home, let's say they're 50 or 60 years old and they're living in their home, like they don't need a credit score anymore. So that's why they start paying off their cards and they start canceling it down. But what I say to them, and I'd love to hear your point, is a credit score can help you in so many ways other than just buying a house and buying a car.
Mm-hmm. Yeah. So what
Run
if you
with it. I want the expert to say it. Go.
so yeah, a credit score is more than just buying a house and buying a car. What if you have an emergency and you need a loan
Yes.
and you
Mhm.
have a credit score, or
Mhm.
you have a bad credit score? Now what are you going to do?
Mhm.
Um, and being a homeowner, we all know as homeowners, the roof might have a leak. Your AC might go out. There's $10,000 right there.
Mhm. Yep.
Being a homeowner
I
is not
know.
easy.
No.
So if you're needing some type of financing, which I always recommend lines of credit,
Mhm.
because they have lowest interest rates. And then if you don't use it, it doesn't count against you.
Mhm.
Um, but yeah, you always need your credit score for emergencies. For if you do, what if you need a new car? Your car is not going to last forever. If
Yeah.
you need a new car, or earlier this year when the interest rates on mortgages were the best they've ever been, I refinanced.
Me too. Me too. Yeah, I got a great rate and I went from a 30 to a 15 and I'll be paying it off in 8 years. Like
Yeah.
I'm on track for doing that.
And you
Absolutely.
know how many
And
people came?
$40,000 doing that.
Yeah.
$40,000 with getting a smaller rate and going from a 30-year to a 15. Yeah,
Mhm.
it was
And
crazy.
you could also do the same with your car. You could refinance your car and get better terms.
People don't know that. People don't know that. They feel like once they sign on the dotted line for their car, like that's it. They're stuck with that car payment.
No, that's one of the things that we work on with our clients is once we repair your credit and do all that,
Mhm.
then we could see, like, just being in the finance industry, I can see what your car payment is and what your loan amount is, and I can kind of estimate what your what your
Mhm.
interest rate is. So I'm able to be like, okay, you can, like, let's start lowering some interest rates. Let's contact those credit cards that you have. Let's lower those, right? Let's
Mhm.
If it's time to refinance, my husband is in the mortgage industry as well. He's a loan officer. So we have tons of knowledge on, like, the mortgage side as well.
Mhm.
But yeah, we're like, let's refinance, let's lower your bills, because really, when you have a low credit score, that's just more money out of pocket, right?
Mhm.
So you're
Mhm.
not stuck with those terms. Once you fix your credit, you could always go back and renegotiate everything. Get a new get renegotiate all of it. You need more money in your pocket. You are a brand new person.
So you don't just fix people's credit reports and help them increase their credit score. Like you guys are helping them in so many ways. Like you really are. You're really helping them. And sometimes people need that. They need a little bit of hand holding, like how if they want to increase their credit score, but they already have a car loan. Like my first car loan when I was like a college student, I didn't have much of credit. I barely had a job. Like my job was minimum wage. And the car that I got approved for was like almost double my pay. Like I had to get another job to afford my car. And that was back, like you're in college, like you have no idea like what you're doing at that point. At least for me, like I learned as I went. But so many people, like they think their credit score is low, so their car payment's going to be so big, but having you by their side to be able to fix that for them and be able to then help them refinance their car, like that's amazing. You're probably saving them so many thousands of dollars by working with you.
Yeah, and we explain to them like how the car buying process works, how they should go about it so that it doesn't hurt their credit score. We always let them know, like, don't go to the dealership and just let them run your credit, because they will run it through the system, and then your credit's going to tank.
Oh, not only that, but then like they approve you, at least back then, they approved me for something I couldn't even afford. And they're like, okay, there you go. I was literally working to drive. And and luckily gas prices were really low then, because if not, I wouldn't have been able to do anything. I was like the cool person that was like having two jobs in order to be able to afford their car. It was so sad. But yeah, it's just the knowing, the knowing the power of fixing your credit and your credit score. And not only that, I another thing to touch on is it's not just about buying a house, and it's not just about buying a car. Your credit, just like money, touches every aspect of your life. Now, all of a sudden, I keep getting comments from my clients. I haven't seen it in New Jersey yet, but I have seen it in other states where your credit score actually affects the rate that you get for auto insurance.
Yeah, they're starting to do that now.
Mm-hmm.
Yeah, a lot of these places are taking advantage of people with lower credit scores, and they can see that they can mark up their price if
Wow.
they just run your credit. So yeah, a lot of companies are checking your credit score. Jobs are also checking your
Yes.
credit score. We recently had a client that was going to become a police officer,
Mm-hmm.
and he had to fix his credit before being able to graduate the academy.
Wow.
So I mean, credit is, I mean, it's taken over. It's taken.
It is because it shows I mean, I can see why, because it shows you're financially responsible, and I'm sure that for certain jobs, like security jobs, like I had a client that I helped him pay off his credit cards because his credit score was so low and he was in debt and he wanted to go for a security job. And by paying off your credit, that is one way of getting your credit score to reflect that as well, being more financially responsible. But he wanted to pay off his debt at the same time. But security, I mean, that's another thing too. I mean, those drivers that have the Brinks truck, I mean, they have to do a credit check because they're driving all that money.
Yeah.
And like if you have someone that owes like has a horrible credit score or owes a ton of money to someone, like you're not going to want them to be the one that's handling the money and driving it from one place to the other, or being the security guard somewhere like a bank. So it's credit score, just like money. It touches so many different aspects. And that's why whenever I get that comment about like, I don't need a credit score anymore, I'm just like, you never know. You never know. It's just like an emergency fund. Like you just don't know when you need it,
Yeah,
So
and with inflation and everything going up, back in the day, you could save $60,000 eventually and buy a house. But
yeah.
now,
Mhm.
are you gonna save $400,000? I'm in Texas, so our prices are.
I can't. Oh my
But
gosh.
it's like you need
Yeah.
credit. I mean, you're not
Yeah.
gonna have all that cash.
No.
You won't be a homeowner, or even cars. Cars are more expensive these days, and
Yes,
so
they are.
back in the day, you might have been able to save and get a nice car, but
Mhm.
these days, I mean, how long is it going to take you to save? The average person probably doesn't have 40, $50,000 in their bank account.
Mhm.
That's just
Mhm.
the reality of it.
Yeah.
So
Yeah.
you have to finance.
Yeah. Absolutely. Absolutely. I mean, it's sad to say that the statistic I just heard the other day was that 30% of people are still living paycheck to paycheck. So if an emergency happens, they put it on a credit card. Like if you need to buy a car, now you don't have a deposit, you have to rely on your credit score to hopefully be able to afford a car. Like it's a reality of it, unfortunately, but that's where we are. So that's
Yeah.
why I was like so excited to have you on, because credit just touches so many aspects of our lives. And having a business like you by their side, like, can change everything. It can literally, and also save them so much money. I mean, just the fact that you're able to suggest refinancing a car loan, that alone, I'm sorry, but I can tell you, I know at least 10 people off the top of my head that are overpaying for their car because they didn't have the best credit score walking in. And unfortunately, the banks take advantage of that.
They do. When you don't have a good credit score, it's not to say that you can't do anything. There's
Mhm.
always going to be a place that's willing to loan to you, but
Yes.
are you really going to want those terms and that money, right?
Uh-huh.
That's really what it's about. It's what are they really taking from you because you didn't take care of your credit. You're
Mhm.
paying more for your car. You're paying more for your house. Your interest rates, if you do have credit cards, now you're paying high interest rates on credit cards. So
Mhm.
you're paying way more than you're even charging on it. And it's not worth it.
Yeah.
In my
No, it's not.
it's not worth it.
It's not worth it. No, and it's
And I think that that's why a lot of people feel like they're living paycheck to paycheck, because when you're overspending hundreds of dollars here and there, that adds
Mhm.
up.
Yes. Yes, it does.
It adds
Absolutely
up.
does. And it can make the difference. It can make the difference between feeling stressed about money to feeling like you're in control about money, which is so important. It's so important to get out of that mentality and that stress associated with money, because that can only lead to negative things moving forward financially as well. So if anyone that's watching that was like, "Oh my gosh, I need Sheila by my side," like, what do you do? Like, how can they contact you?
So you could reach us on our website. We
Mhm.
do free consultations over the phone.
Mhm.
And our website is cheatingdebt.com.
Mhm.
You could also Google cheating debt. We have podcasts. We have tons of stuff out there, but our website will come up, all of our reviews,
Oh,
everything will come up. Just Google cheating debt.
I looked at your website. I looked at your website because like her website and her phone number are linked down below so that you guys have it available so that you guys can reach out. And I know that they're willing to like talk to you guys and see like how they can help you and also like guide you through financial decisions, which is the best thing, because with that knowledge, you can just take it moving forward after you're done working with them and continue making decisions that can positively affect you financially. So
Yeah.
I'm so glad that you're here. I couldn't wait because I'm telling you, I can't tell you how many times credit score and credit reports and canceling cards just comes up on my channel. I should just have you on like once a month and be like, don't do that.
Hey, if you'll have me, I'll be here.
Oh, I'd love to. Oh my gosh, you have to come back.
Yes.
One question that I'm asking all my guests, because I want people to get to like know you on a different level as well, is if you could offer one piece of information to anyone, like a piece of advice to anyone that's watching right now, what would that be?
Piece of advice.
Mhm.
I would say work on your credit when it's not needed. Um, that saves you stress, that saves
Mhm.
you so much. You don't know how many clients come to me and say, "I need a car, and so we need to fix my credit in the next month, in the next couple weeks.
Wow.
I can't get approved for an apartment, and I need to be out in a month." Or "Oh my god, my wife fell in love with this house, and we need to move quickly, but we need to work on our credit." So I always
Mhm.
say work on it when it's not needed.
Mhm.
My husband and I always say work on your finances in the good times, and that way you're not stressing out during the bad times.
Mhm.
That would be my suggestion. And another little one that I would say as well
Mhm.
is I'm a mother, and when you speak so positively on your finances and credit, your children will pick up on that.
Wow.
So you need to stop the generational curse of having bad credit, of talking negatively about money, because whether you know it or not, your children are listening. And I know that from my 11-year-old daughter, which is investing already. She's
Wow.
has her savings account. She was talking to the she was talking to the bank, the teller, and she didn't understand why she couldn't have a debit card. And she was like, "No, I'm responsible. You don't understand." And they're like, "You're not old enough to have a debit card." And she's like, "No, like I need to be able," like she wants to be able to like make her purchases, and she does like her investments and everything. But yeah, she didn't understand, like, you don't know me. Like, my parents have a credit repair company. Like, I know what I'm doing. Um, it was just I wish I would have recorded that conversation that she had with the teller, because she just didn't understand, like, why they would just only give her a ATM card.
Yeah, that's amazing. That's amazing. Honestly, you just inspired. Like, okay, I have to have you back, and we have to talk about kids and money. Like, we have to, because it's such an important topic as well. It's like, yes, we need to change the way that we talk about money to our kids. It shouldn't be something limiting, like we can't afford this. Instead, it could be something like, you know what, honey, right now, let's not do this right now. Let's think about it for the future. Let's save for the future.
Let's save for the future.
Yes, changing that rhetoric. Like I was raised where, like, I didn't know what a credit card was. I knew my parents were barely living paycheck to paycheck. There were days when my mom didn't even eat. And so to me, I was raised where money is stressful. Like, money is stressful. And I carried that for many, many years until finally I started gaining, personal personal finance information. And the more I got, the more I got empowered with it. And now, like, I'm coaching people on how to get out of debt. But it if we could just change that rhetoric with the kids, could you imagine where they would be when they're our age? Like,
Yeah,
we'd have millionaires for kids. Like, how amazing would that be?
amazing.
Yeah,
Yes,
absolutely.
that's my I always tell my daughter, "When you're a millionaire, you're gonna take care of me. You have to need to be in, like, one of them senior living homes, like, I'm just gonna have my own suite in your house, and you can pay someone to take care of me if you want."
That's amazing. You gotta take care of me.
Yeah,
I love that.
you gotta take care of me. I'm setting you up for the future, so you gotta take care of me.
Yeah, right. Oh, gosh. This has been amazing. Thank you so much for being on. And again, if you guys want to reach out to Sheala and look up cheating debt, you don't even have to Google it. All the information is down below. Is down below, and you'll see that she's just amazing. And you need someone by your side, like Sheala, in order to be able to get your credit right, because again, it touches so much of your life. And just by this conversation alone, I'm guessing you save people thousands upon thousands of dollars working with you.
Yeah, sometimes I'm just, like, randomly talking to people, and sometimes some of the things that I think about naturally are
Mhm.
not some things that people just know,
Yes.
and so when I say it, they're like, "Ooh," and they remember it, and then,
Mhm.
like, later on, they'll be like, "Oh, I did what you said when you were talking to so and so, or when you did this, and
Mhm.
it saved me." I know my husband and I one time were talking about how we save money, and somebody came back, and they were never a client or anything, and they said, "We were able to go on our first vacation because you had a conversation about how you save your money."
How
And I'm like, "Oh
amazing.
my gosh." And it wasn't a formal conversation. It was just
Mhm.
a little chat my husband and I were having about saving.
Yeah, and that's why people having a positive attitude about personal finances is needed. It's
Yes.
needed. So, thank you so much for being on. I'm so glad to have you, and I can't wait to have you back.
Yes, thank you for having
Yes,
me.
of course. All right, guys. Thank you guys so much for watching. And if you guys have any questions, you can reach out. I also have Shayla's Instagram account down below, so you can always send her a DM if you'd like.
Yes.
All right. Thank you so much. See
Thank
you guys
you.
soon.
Bye.
Bye. Bye.